If your stock matches that stock market's average, then they'll say your beta is 1, meaning it goes along 1-to-1, just like the market. So if the market's going up and down, your stock will go up and down just like the market. It's not going to have big swings and low swings, theoretically, because again, nothing's absolute. So you're looking at the beta and you're saying, will this stock fluctuate a lot? And in this case, it has a beta of 2. So anything over 1 is moving more than the market, meaning moving up and down, not moving higher than the market, but just moving and fluctuating up and down more than the market. So in this case, it's a 2. So that means it's 2 times the average that market would be. So this is a very volatile stock, and volatility can cause risk, meaning that, a lot of times we look at Bitcoin. Bitcoin is going up, down, up, down, up, down. One day you might have $5, the next day you got $10, and you got $3. It's so volatile, you just don't know where it's going to be. Well, a stock that has a high beta is going to have that same type of volatility, where it's just going to be up, down, up. One day you don't know, it's going to move faster than the market actually moves. It's going to go, and those price movements are going to swing. So that would be looking at the actual beta, or the risk or volatility of the actual stock. In this case, we have what's called a PE ratio. So that's the price to earnings ratio. And if in this case we're showing an NA, which NA means that this company does not have earnings. It's not profitable. It's not making money yet. This company is still trying to establish itself so that it can become profitable and have earnings. So right now, the price to earnings is not going to show anything because the earnings are actually going to be negative. Earnings per share, this is going to be a negative number because what it's taking is, if the company has no earnings, which in this case, Alkaline 88 is not a profitable company yet, so it has no earnings. But for companies that do have earnings, it takes a look at the overall profit, all of the money that the company has made, the net profit, what's left, and they take that profit amount and divide it by the number of outstanding shares that it has. And, to see per share how much money is each share worth. All publicly traded companies have to report their earnings, have to report their financials. They have to report the status of the company, the paperwork, the books. What does the money look like? And so they'll give you that date so that you can watch out to see what the news will be. If it's going to be, more than what we anticipated, right along the lines of what we anticipated, or maybe we're not doing as well as we thought we would. But that date is when you and I, the public, will get to see the information on how the company is doing.